Hey everybody, it is Tuesday after the bell, taking a look at the S&P 500 midweek update as we get ready to trade Wednesday the 27th. If you want more in-depth information on where we are at, please watch the last video that I posted over the weekend. It's in the YouTube channel. It was pinned to today's Tuesday thread, and it was pinned in and it pinned Monday's thread as well. Or like I said, you can just go get it out of the YouTube channel. If I think of it, I will try and post it and add it to Wednesday's thread just so that it's there for you. Easy to find, easy to reference. Okay, here's where we are at. We had our big breakout day on Thursday last week, sold it all back on Friday, and then continued lower on Monday. We pressed down through and filled one gap and pressed down most of the way through a second gap down below, this one here that exists between the 12th and the 13th of March. Did not quite fill it and then reversed back up, but then our close failed to close back above the 20-day simple moving average. That, to me, I thought was going to spell disaster for us today. But instead, we got a buy program overnight, like later on overnight, like around the time Europe opened and got going, or in our very early pre-market, we got a rally going, and that got us a gap up open and run. But we ran up, so we gapped up open, we took out the 10-day, and we ran on up right to 29.44, level from October 10th, 2018. Like I said, the weekend video will explain to you why that stuff is so important. But we rejected right there, fell back. Before you knew it, we were back below the 10-day simple moving average, and then before you knew that, we were pressing down to a lower low of day and into the gap to Monday's close. Well, we held the gap open a little bit, just like we held this gap open a little bit, reversed off of it, and then rallied back at the very end of the day. And just like yesterday with the 20-day, we come in here and we just shy of closing above the 10-day simple moving average. So does that mean we're going to have another little bit of a gap up and go tomorrow? I don't know. But if we do, this is how we should trade it. If we open flat to slightly higher, that means we're opening above the 10-day simple moving average. And then we need to go after Tuesday's high. Tuesday's high was a direct fail at a key breakout point. If we can get past 28.29.44, we're probably going to slice right on through 28.33 and just keep continuing on with our target being 28.46.50. When this is a key level from October 10th, 2018. When we add the 5 to 5.25, maybe 5.5 points spread for ES is going to be trading at around 28.51, 28.52 at this point. So that's a real recipe for a spot that things could reverse and fail. Okay, a lot of people are looking for 28.50 on ES, but there's a lot of people saying that there's a ton of supply up above it, which you can see here that we took a look above this level here once. Here we couldn't even get back above it. We took a good look above it and even closed above it on Thursday of last week, but then we gapped down below it on Friday. So this is, like I said, this is a key level for the S&P 500 from back on October 10th, but it also represents that low 28.50 handle on ES, and there's probably just a lot of supply there. So if we can't get above 28.46.50, take your profits in your calls or hedge or do whatever you need to do. That's a really nice trade, especially if we open flat to only slightly up. If we can make it through 28.29, I do really believe this is going to be our target. And hey, we could trade above this. We could trade above this, fill the gap to Thursday, make a new closing high, or trade right through and trade a new intraday high. I have no idea, but that's just know that this is a good potential point where we could sort of fail and back test for a little bit. Okay, now what if we come in and we are, flat to looking downwards a little bit? Well, then obviously, we have our 28.17 level that is one of our breakout points. There, 28.17, 28.29.44, 28.33, and then 28.46. Those are our breakout points. They all relate back to what was going on the 10th of October. If we open and fail 28.17, then obviously we got to go and finish the business that we didn't get done today, in that we're going to test the 20-day simple moving average and fill this gap to Monday's close. And if we get down below Monday's close, then obviously we're going to finish the business that we couldn't finish on Monday and fill this gap in here that goes all the way back to this point here from March 11th. At that point, we'll be below the halfway back from March, and it really leaves us vulnerable to testing all the way down to here, to the March low. And there is a huge gap to fill below that. However, on the way to getting there, we have this key halfway back point, 27.6581. That's the halfway back from this day here, the 11th. This was a huge, huge breakout continuation day. Like, we bottomed out, we made the March low, and then we continued the rally with a gap up and go the next day, and we rested right here at this 27.8330 level. This level coincides to the low from October 10th. So you can see that there was a lot of, resistance and messing around trying to get above and stay above 27.85. And then when we got this nice big, turn and follow through day, we gapped up, and then that led us into the leg that brought us to our current 2019 high. So this could be a level that holds support for us. We could, simply make it down here to 27.65 and reverse off of that. If that doesn't work, then we've got the 200-day, we've got another gap, and the 50-day simple moving average. And then to top that all off, we have this idea of a measured move, a double down of this range that was made Thursday and Friday of last week. Taking that range, excuse me, and doubling it all the way down would take us down here to about 27.37 for a good, healthy test through a lot of stuff. Okay, as for how to trade these two things, since we'll be on Wednesday, if you still want to use this Friday's expiration, try to stay in as close to a strike as you can, paying for the $5 window. In my opinion, if we trade up here to 28.2944 and fail, you can get the 2,800 puts for for that $5 window. If we trade on through here to 27.46, you could probably get into a 28.25 put for the $5 window. If we open flat to slightly down, look to the 27.90 on through to maybe the 27.75. But if you're going to go below 27.75 for a put, go out to at least Monday or go out to next Friday, that Friday of April week 1. As far as calls go, if we open flat to slightly higher, use the 28.40s. I'm in those. I'm also in some other stuff. If we open up a little bit more so that those 28.40s are out of the $5 window, then go look at the 28.50s. I would not go any higher than the 28.50s at this point in time. If you want to go out past the 28.50 strike on the call side, once again, just like with the puts, look at Monday or look at next Friday. Okay, I hope this helps you out. If you have any questions, send me a DM and I will answer them as best I can. Have a good rest of your evening. Good luck and good trading.